Today in the grain market, soybeans did fall a bit. The drop in soybean meal really put some pressure on the soybean futures. We're staying within that same $1.36 channel that we've been in for the past 3 weeks. But the market is kind of reacting right now to the forecasters that still expect hot and dry weather coming in as we approach August. And also the outlook for the yields is still kind of in question right now. So that would be is expected to kind of impact the market as we go forward. A couple of things though, the November option open interest, I think the totals, let's just take a look at where we are here in the middle of summer. With the calls have a total of 170,000 contracts in open interest, with the highest being the $15 strike at 18,000 contracts. On the put side, 112,000 with the highest puts at the $13 mark, and that's with just 11,000. It's just important to kind of keep an eye on this because they do impact the market as we go forward. So the CVOL today for soybeans is 31.5%. The meal is at 48%. The oil is at 48% and the meal is at 31%. So they're all still pretty strong overall. Today we were down about 26 cents at one point today. So the market did pull back somewhat. Now the corn was lower today. Some rainfall was expected in the corn belt, and it kind of like it was a little bit of a change in the forecast, just really for the near term. That being said, we're still stuck in that same channel we've been in from 566 to 658. The December open interest now had some calls selling, not a whole lot, but the totals here now are with the corn calls have 612 on the open interest on the call side, with the highest being that $10 strike, which has moved from the $8 strike at 48,000. These kind of numbers, I think, could really impact the market as we go forward throughout the summer. Now, the puts have 344,000 open interest, with the 540 and the 550 strike each having about 23,000 open interest. So that's where the fence is pretty much for the puts and the calls. The CVOL for corn is at 41.9%, which is down a little bit, but still relatively strong for corn overall. We were down about a dime today. Now, wheat futures were firm. I think that we still are facing that oversold condition, and it kind of gave confidence to some bargain hunters to step right in and start to, buy, some of these futures again. The world supplies seem to be in question a little bit and for the foreseeable future, and that's why we see Kansas City and Minneapolis wheat all pretty strong. Now, September open interest for options are certainly much smaller than corn and soybeans, with the calls at 88,000 contracts and the puts at 61,000 contracts. But the fences are $9 strike on the call side, $8 on the put side. So really in there tight, and of course we're trading kind of right in the middle. But make no mistake, wheat is still a big player here with the CVOL at 54%. So very strong right now, and it's just indicative of the high volatility. The recession issues are, remain a big issue with all the grains right now. So that's something to also keep an eye on.